Hey, it's Ian checking in with another market update here in central New York, and it's a doozy. Sellers, where are you? You're lost. We need an all points bulletin on home sellers. Seriously, you were gone last month. You were completely absent, gone without a trace. The first 48. I could do this all day. I'll move on. But no, in all seriousness, we're looking at closed sales for the month of April in Onondaga County, and we are low. We are 199 sales were closed in the month of April. That's down rather considerably, something in the ballpark of 33% compared to April of 2022. So what gives? Well, there's a couple different things. There are a couple different market factors that kind of all play into this. But primarily, it just kind of comes down to sellers are not necessarily motivated to sell their house right now. A couple reasons I've heard in conversations that I've had with would-be sellers is then they got to be buyers in this market. Well, you may ask, okay, well, why wouldn't you want to be a buyer in the market? Well, here's why. If we're looking at median sale price for the month of April in Onondaga County, we set the all time record. Okay. So I had been saying for months on end, I didn't anticipate that in 2023 we were going to be setting any housing records. I knew we were going to be trending towards historically high prices. I didn't think we were going to set a record, but lo and behold, the last record that we had was in July, where the median sale price in Onondaga County was $227,250. In the month of April, it was $230,413. And if we're looking at what's that jump April to April, that's something in the ballpark of 15%. So it's a rather substantial jump, especially when, if you remember just 5, 6 months ago, you had a lot of the Chicken Little Brigade that was out there clamoring that there was going to be a recession and housing prices were going to collapse and the market was going to be in shambles. Well, that clearly has not happened. Now, this is all simply comes down to supply and demand. When we're looking at the prices, okay, so the prices are representative of the demand of the market. Obviously, the new listings, right? If we're looking at new listings for this same 12-month period, you can see that that's kind of clipped down, and it's rather substantially lower than it was back in June and July when we were dealing with the last period of record-setting prices in Onondaga County. So there is high demand, there is low supply. That means prices are going to be high. And when we are considering why a seller might not want to enter into this market, well, yeah, they might be able to sell their house for top dollar, but unless they're downsizing, right? Let's just say that they've outgrown the house and they need to buy something bigger. I mean, they're also being going to be paying a premium top dollar for that, and also we're still dealing with not 40-year record high, 30-year fixed mortgage interest rates, but we are still dealing with higher interest rates than we had 18 months ago. So that's also a part of it. So not only are the prices high, the interest rates are higher than certainly what those would be the typical would be seller in this market has for a current mortgage interest rate. So, there's a couple incentives as to why they might not want to be engaging in this market. Many reasons why, if you can afford to buy, why you ought to. I've done innumerable videos on that, so I don't want to waste the time talking about that here. But if you are interested in trying to figure out what's your way forward as a buyer in this market, more than happy to have that conversation with you privately. You are always welcome to send me your message. Up top, you'll see the banner where you got my cell phone. You can call or text me anytime. But if we're looking at Onondaga County sale price for where we have been historically, again, we kind of scale this back 5 years. You'll see that here in April, we're right where we right where we left off in the summertime. And especially if you pull back and try to look at the last, 10, 11, 12, 13 years, the story's pretty clear. The pandemic was here. The era of high stock market prices was in here, record low unemployment, low inflation, and that's sort of what kind of got the market started. The pandemic happens, and then it's a little bit of a different story here on out. If you got any questions about the market, how you fit into it, and what your role could be, you can feel free to reach out to me. Like and subscribe. Always here to help.